Hi there, my dear viewers. In this video I'm going to discuss the performance of the Kijun cross strategy, which is part of a series of Ichimoku trading strategies. This strategy is well described in the book How to Make Money Trading the Ichimoku System by author Balkrishna Sadekar. In that book, the Ichimoku indicator is used as a baseline to create different types of trading strategies. The Ichimoku Kinkohyo, also known as the Ichimoku cloud, is a technical indicator used to gauge momentum along with future ideas of support and resistance. It was developed by Goichi Hosoda, a Japanese journalist, and published in the late 1960s. The indicator is comprised of 5 lines called the Tenkan-sen, Kijun-sen, Senku-span A and Senku-span B, and the Chiku-span. In my video and blog post on developing a crypto trading bot strategy with the Ichimoku Kinkohyo Indicator Part 1 Introduction, I gave a detailed overview of these indicators and also how to create them in a notebook and pandas data frame, so that you can create your own algo strategy based on this indicator. I explained the Ichimoku Kinkohyo Kijun cross strategy in more detail in earlier blog posts and a video, and there I also described how to create the strong signal version of it. For my Patreons, I created an additional video where I explained how to make the additional neutral, weak and no Kumu versions of this strategy. And I also provided a notebook I created to make these indicators. And in this video I will present you the results of the backtests of all these versions to see which one gives the best results. By doing these backtests I will try to get a sense of the best performing variant and possible future performances of that video. Also, I will not only test the spot trading version but also the futures version. There I also will do long and short trades and hopefully find out which version is the best. So in total I will test 8 versions of this strategy. But for a reminder, let me first explain the strategy first and its signal strength versions and then proceed with the backtest results. For this strategy, only the Kumo cloud and the Kijun-sen should be used. And also another important note that you should keep in mind is that in this case I will use the default Ichimoku settings of 9, 26, 52 and 26. I did not test a version that uses the indicator lengths that are sometimes advised for crypto trading. Those are 20, 60, 120 and 30. Anyway, let's continue with the basic rules of this strategy. A long position is taken when the price closes above the Kijun. And when price closes below the Kijun, a short position is taken. Now, this signal can occur at different positions from the Kumo cloud, and each position has its own signal strength. Specifically for bullish or long trades, if price closes above the Kijun and this crossover is above the Kumo, it is considered a strong bullish signal. A weak bullish signal will be considered when price closes above the Kijun but the crossover is below the Kumo. And if the price closes above the Kijun and it is within the Kumo cloud, then it's considered a neutral bullish signal. And for bearish or short trades, these signals are reversed. Now for the stop loss settings, when there is a longer trade, the stop loss is initially set below the Kijun. And in the book there is also a small buffer proposed, but since it's not clear how this buffer is set or which indicator to use, I will use the close below Kijun for the stop loss signal. And also, these stops are also considered trailing stop losses. So once a position is taken and the close price is not below or above the Kijun, then as long as this is not happening, the trade will be open. In my usual videos, I normally take the time to explain some of the code of the algo strategy. But since I explained this code in my other post and video about this, I will kindly nudge you to see that video or read that post. And here in this video, I will only stick to the results of the tests I did of all these 8 variants. And at the end, we will see in the strategy league which variant scores the highest. So without further ado, let's first see what the weak signals deliver and how well the strategy performs. Now for the spot variant, the Kijun crossover's weak signals do not disappoint and would provide you with some gains overall. Of the pairs I have configured to do the backtests on, 50% respond to this algo and in total would give 432% profit. The negative thing about this is its low win rate and its large drawdown. And the 1 day time frame seems to provide the best options here. But since the ratios are very low, I would not bet my money on this variant for the future. Also, the results chart of this variant does not show a steady and healthy growth. My guess is that the bot did nice during the last bull run, but now you have to face a large drawdown during these bearish conditions. And if you think about this logically, this is actually exactly the behavior you might expect from this variant. The strategy also, or might I say primarily, receives buy signals from crossovers that happen below the Kumo, and the Kumo is the main indicator of bullish and bearish markets. And since there only are spot or long trades taken, I might expect that these get stopped out lots of times when the price goes below the Kijun Sen once again, when diving deeper into these lower price ranges in these bearish conditions. Seeing that 683 long entries win only 159 times and exiting with a loss of 523 times, which is the 23% win rate by the way, tells me that these large amounts of losses might be partially turned into winners also if I also could have used shorts. So therefore, let's take a look at the variant that is also allowed to make short trades and do futures trading. Now, before I continue, I have to warn you that these shorts results cannot be 100% compared with the spot trades earlier. Not only does Binance not provide the exact pairs for short trading as with spot trading, also the time periods of the backtesting data can be different than the spot-only version. And in most cases these are shorter. So let me show the first variant of this strategy. And as you can see, the difference is not that much. It even performs a little bit worse in total amounts of profits. But if you look at the ratios, then you will see that this scores much better. Now try to keep in mind though that these reverse conditions count for the short trades. So if a weak long signal has its close above the Kijun but below the Kumo cloud, then the weak short signal has its close below Kijun but above the cloud. And looking at the enter and exit statistics, we can see here that there are almost as many long trades as short trades, 553 and 327. And both directions had between 25 and 30% win rates. And this is comparable with the spot trading only variant. And again, remember that the futures time period is not 100% comparable with the spot period. Also, when the bot is in a long or short trade and a similar opportunity exists in the other direction of another pair, then it is possible that it could not execute the trades because of the amount of open positions the bot has. Nonetheless, the behavior of the long and short trades over the last period shows a totally different picture when we take a look at the overall profit plot. It has a nice upward slope and after its maximum drawdown, it sort of stays near its zero line. Also, the bot's parallelism chart shows that it's almost always have its maximum amount of open trades used. So there are no opportunity costs here, since the bot is always busy with trading one way or the other. And if I have to choose between the spot and futures version at this moment, you'd probably know by now which one I'll take. Now let's switch over to the neutral trade signals. Here the close above or below Kijun should be within the Kumo cloud. And seeing these numbers of these spot trades makes me very curious to see the strong signals. A hypothetical spectacular result of over 3000% profits makes me also a little bit suspicious. Maybe we caught some pumps over here that are quite common in crypto. And if I take a look at the best performing assets of that time, then there are certainly some spectacular winners in the portfolio. My main focus therefore is more on the applicability of the strategy, the ratios and drawdown. And it seems that this strategy does not suffer the fate of the weak spot signals by getting signals below the cloud. In this case, the signals within the cloud really do give higher chance of getting into a trade that has more chance to make some real profits. And as you can see, the average profits here these trades have is more than 9%. Whereas in the weak signals they were around 5.8%. Still admirable though. And with more entries in this case, a slight higher winning rate and lower drawdown, that adds up nicely to the total trading account. If I take a closer look at the profits chart, here we can see that we discover crypto pairs that cause this high profit percentage at their vertical lines. Also, the bot is more busy with having trades, probably because there are more signals within the clouds than below them. But unfortunately, this neutral signal version suffers a little bit of the same fate as the weak spot version. The main drawdown starts at the height of the last bull market and we have no point where it ends because the backtest has stopped. Switching over to the futures version of this neutral signs variant, the results get less spectacular, but the trustworthiness of the strategy for long and short trades rises. Seeing the ratios getting well above 1 and even almost 3 for the Sortino ratio makes me get more confident here. And also the drawdown is starting to get into the lower 30s, and the modest increase in win rate to almost 36% gives this version the highest score so far. Looking at the pairs and their win percentages, they also look pretty normal for crypto. Now, in real forex trading you probably would never have a 308% profit within 15 days. But in this crypto market it's pretty normal, especially when the bull phases arise. The most noticing things about the profit chart here of this variant are the steady profits, the parallelism and the vertical line of Matic. However, I still do not like the drawdowns, they are still too many and always way too deep to my taste. But they are getting predictable because every time the market cools down, the drawdown starts. So let's hope this improves even more when we look at the other results of the other variants. The next signal types I will discuss have actually no indication on how strong or weak the signal types are. It only trades on the cross up or cross down of the close price on the Kijun sen. So in this case the Kumo cloud is not involved at all and the bot only trades on higher or lower than the Kijun. So let's see what the spot results look like. And these results look pretty decent and on the 1 day time frame it even has the highest profit percentages until now. Now again, do not stare blindly on profit percentages only, but look at the bigger picture. Notice that this variant also has a drawdown of 58%. And the win rate is only a meager 24%. And the amount of pairs that react well to this variant is also not that high. Looking at the profit plot, we see that this variant also has a pretty sharp inclination during the last bull run. But it drops after that, and that drop is also pretty steep, which results in that large drawdown. Also notice here that large vertical line Shiba Inu has in the last bull run. It went vertically, and this also probably explains the large profits of this variant. So always stay a little bit skeptical about these profit percentages, especially in the crypto market. Comparing the spot version with the futures one, we see that the profits are still admirable. The ratios are much better and the drawdown isn't that much of that of the spot only. And what I'm also starting to notice here is that the best time frame seems to be the 1 day time frame. Even though that the Ichimoku indicator can be used for all time frames according to the theory. But as you can see, it is possible of course to trade the Ichimoku on the lower time frames and it would bring you a hypothetical profit according to these backtests. And what is also interesting here is that the amount of long and short trades during this backtesting period is almost exactly the same. 366 long signals against 365 short signals. And strangely enough, the short trades actually result in very low profits, and that most of the gains are made by the long trades, even though that the win percentages are almost the same. Nonetheless, watching the profit plot again, I think that there is a nice natural growth curve on the profits, and the pairs plot does not seem to have these weird spikes in profit on certain pairs. At some point the parallelism goes black and stays that way. So here the plot is always busy, either with long or short trades. Finally, the underwater and drawdown plots show some cyclical patterns, which I recognize are somewhat comparable with the market's bullish and bearish cycles. Also, do not be mistaken by the depth of these drawdowns. At some point it's not lower than 25%, so be aware of the resolution of this chart. And now it's time to see what the strong signal results are. According to the book, these provide the best signals for trading, and hopefully by doing these backtests we can also confirm this theory. And after backtesting the spot variant of the strong signals, I got the following results. And boy, they indeed seem pretty spectacular to me. The 4-hour time frame even has a high of over 7,000% profits, and I cannot remember any strategy until now that has the same amount of profits, ever. But nonetheless, the 1-day time frame seems to have the best final score here, even though it scores lower on the Sortino and Sharpe ratio. And the main reason here is the drawdown, pairs ratio and poor win rate on the 4-hour time frame. On that 4-hour time frame, you would have to have a lot of patience and have a long time and faith that these drawdowns can be again turned into profits again. Looking a little bit closer to the entry and exit signals of the 1-day time frame, we can see here that the average profit of the trades is almost 12%, and that with only a 30% win rate. And looking at the best performing crypto pairs, again you would see that Shiba Inu in this backtesting period has brought you almost 2000% profits. And of course this counts a lot against the total profit percentage. Matic and Solana are also the other pairs that could have made you very happy with your initial $1,000 investment. But you'll have to remember that these can also be considered as outliers for lucky trades, and that these will not be happening in the future anymore. And also you have to endure this chart, where from the top of the last bull market, your acquired fortune slowly bleeds back into the market again. You'll have to see your bot doing nothing most of the time, as you can see at the parallelism chart. Now for spot trading this actually is not bad, because there are not many long trades to make in a bear market. But again, these can be considered opportunity costs, if you know that you also can go short during these bearish periods. So let's find out how the performance would be when the bot also makes short trades during these bear markets. So now we are maybe coming to the pinnacle of this trading strategy, having strong signals and making use of both the long and short side of the market. I expect that this last variant will perform the best of all, and hopefully I am right about this. So let's watch the results of these backtests I did with this variant quickly. The first thing that is interesting to see here is the time frame. Until now the 1-day time frame was always having the highest scores, but this time the 4-hour seems to have the best cards. And then the amount of profits that this time frame has is quite comparable with a lot of the other variants of the Kijun crossover strategy. All these profits hover between 1800 and 3800%, and this one is somewhat in the center. The win percentage and drawdown are also similar from what we have seen before. But what this variant makes scoring like this is, are the ratios. The CAGR, Kalmar, Sortino, Sharpe and pairs ratio scores the best of them all. So let's take a more detailed look and watch the enter and exit reasons. And by looking at these reasons we can see a little bit more in detail what happens with all the trades. Again, what strikes me here is that the long signals make all the profits happen, and that going short actually makes some losses. There are more short than long trades, and their win rate is almost the same as the long trades. And I expect that in this case the algorithm also catches some big pumps of a couple of pairs, and therefore has more profits on the long side instead of the short side. Actually, I hoped that this variant also would catch some big crypto dumps as well, because they happened. And I did a little investigation on what the possible causes are. So here you see a small snippet of the Bitcoin plot, and you can see here that there is indeed a sharp drop in May 2022, which is caused by a 16% winning short trade. However, because before and after that one trade the price stays relatively stable and zigzagged across the Kijun sen below the Kumo cloud, which resulted in a couple of losing trades. Now, I saw this behavior a couple of times on this chart, and my theory is now that while the crypto pairs can have very steep drops, they are also relatively stable after that for some time and hover around existing support lines. The possible reason behind the ginormous profits can be that the prices do not really have resistance levels after they break the highest high and then have a price discovery, which then can result in parabolic moves. And some altcoins can have parabolic moves that can be very ridiculous. But again, this is just a theory, and that's why I place more importance on the ratios than on the profit percentages. Also, mind you, this is crypto. Getting back to the profit plot, here you can see again closely that some coins have vertical lines to the upside and then have a slight drop off to lower profits. So you could say that with the coins that I use for this backtest and that were in the top 50 of January 2022, you better have bought them when they were just appeared on the Binance platform to trade, and then hope you have some parabolic moves during the bull market. And now I come to the final conclusion with these backtests and findings. Which variant of the Kijun crossover strategy has the best performance, and where will it end up in the strategy league? And if you have watched this video up until now, then it might not be a surprise anymore, but the strong signaled Kijun cross on futures and the 4-hour time frame has the best performance of all these variants. Now again, comparing this one with the other Kijun crossover ones does not have spectacular differences on the profit percentages, win rate and drawdown, but its score is mostly dependent on the good ratios this strategy has. And comparing this best variant against all the other trading strategies I have tested earlier shows that it certainly not has the best win rate, but the drawdown is somewhat comparable with the top 5. Again, the CAGR, Kalmar, Sortino and Sharp ratios makes this strategy score pretty high up. Now again, please take into consideration the fact that pumps are probably the main cause for the profit percentage you see here. But also note that these other strategies are tested in almost similar conditions. Nonetheless, if you combine the best parts of this strategy with the best parts of the other ones on this list, I think you could come up with an algorithm that has certainly potential to make you money in the future. So with this final conclusion, let's round this video up. If you like these videos, then click on the like button and subscribe to my channel. If you want to support me by buying me a cup of coffee or a sandwich once in a while, then become my patron. I will also leave additional content on my Patreon page, so you will always get something in return. Like for example all the strategy files and backtesting results you see in this video. Thank you for watching, and I see you in the next video. Goodbye!